Folks, we are well into tax season now, and that means it is time to start prepping those tax returns if you haven't already. The fact is that it's typically not a fun task, and there's actually a silver lining this year, and that's the fact that many taxpayers can expect higher than average tax refunds. Now, there are several reasons, but adjustments to federal tax brackets, larger standard deductions, higher interest rates, and other factors will play a role, because inflation is actually helping taxpayers when it comes to their taxes, according to the experts. The standard deduction, which is used mostly by the American people, saw a significant increase for 2023. And tax brackets also saw a generous 7.1% increase, and these two things combined will make it a lot more of a forgiving tax season for many. So if you want to boost your tax refund even more than these conditions allow, let's break down how the experts say to do it. We're going to be talking about 4 easy ways to boost your tax refund according to the experts by the book. Nothing illegal, unethical here. This is all legit. This could potentially boost your tax refund. So stay tuned, folks. You're not going to miss this. Let's dive right in. Number 1, the first way is smashing that like button. Make sure you give this video a tremendous thumbs up. I would appreciate that. This helps with me, the YouTube algorithm, and will probably boost the tax refund. But in all seriousness, number 1 is going to be contributing more to your retirement and health savings accounts if you're looking for a way to ultimately maximize your tax refund after the tax year has already ended, like right now. One of the best ways is to contribute more to certain tax-deductible accounts, most notably traditional IRAs or IRAs, and health savings accounts or HSAs. And those contributions will drastically reduce your taxable income, hence your tax bill. And you have until April 15th, which is tax day, to contribute to these accounts and write those contributions off on your 2023 tax returns. And while this approach will cost you some cash up front, the payoff is twofold. These actions not only will support your future financial security, but also can significantly reduce your taxable income. So ultimately, it is a win-win if you're willing to kind of give the costs and pay that upfront money. Number 2 is going to be choosing the right deduction and filing strategy. So while the standard deduction did increase this year, that does not necessarily mean that it's the best choice for everyone. The shoe does not necessarily fit one size fits all, because for some, itemizing your deductions may be a better way to go. It's important to run those numbers for both options to make sure that you're making the right choice. So in doing so, make sure that you're factoring in often forgotten deduction options like student loan interest, medical expenses, and child and dependent care too. And you should also carefully evaluate your filing strategy, particularly if you are married, because for married couples, there can be times when filing separately may actually yield a larger total net refund to the household than filing jointly. No, you don't necessarily have to divorce your wife, just simply splitting up those returns will also impact state tax returns. So do the math on all of your returns, and you might find that filing separately works out better for the both of you. And your tax professional can help with these comparisons. If they don't, they're simply not doing their job according to the experts. It should never be overlooked. Now let's talk about number 3. That's going to be donating to charity. Let's say you have a favorite charity in mind. What's yours? Let us know down below in the comment section. I'm curious to hear, what is your favorite charity to donate to? Donating to these charities to increase your deductions could be a big play here. You can write off those charitable contributions on your tax returns up to 50% of your adjusted gross income or AGI, as long as you itemize. These contributions can be monetary, as in you write a check to the charity, or a lot of people don't know this, they can actually be in the form of physical goods too. Let's say, for example, you're donating clothes or furniture to the Salvation Army. They can actually qualify you for that deduction. Just make sure that you keep a receipt of the donation, and you'll need it when you file your returns. Maybe want to give it to your accountant. Now, if you're over 70 and a half years old and you have a traditional IRA, you can also use the IRS's qualified charitable distributions to reduce your taxable income and increase that refund. This lets you donate up to $105,000 of your IRA funds to a charity of your choice, rather than taking the agency's required qualified minimum distributions. See, the charity receives the full value of the donation, and the taxpayer avoids paying income tax on the distribution. This will then reduce your AGI or adjusted gross income and potentially lower the amount of Social Security income that is taxable. That's another way. Let's talk about number 4, and that is just essentially being organized and going through everything with a fine-tooth comb. You want to go into the tax filing process with all of your ducks in a row. Have your income documents, receipts for any deductions, and statements from bank accounts and investments on hand. You don't want to just start doing your taxes until you have everything that you need to file them. Organize and ready them so that way they can be entered for your accountant, or if you're doing it on your own. Missing just one piece of vital information could actually cause you to pay more taxes than you need to and want to. Now let's also talk about what you don't want to do. So there's several ways to increase your tax refund, these 4 that we talked about. There's one that all experts can agree that you should avoid, and that's going to be adjusting your W-4 to pay more taxes on each paycheck, because this would actually result in the bigger refund come tax season, but you won't have that money to live on during the year. It also amounts to giving the government an interest-free loan, basically, right? You're just giving that money away when it could be in your pockets. And it doesn't serve to grow your wealth overall either, and overpaying Uncle Sam is not part of a sound financial plan. So these were a few ways to potentially increase a tax refund for this season. There's definitely a lot more ways that we can talk about. I'm curious if you guys know any special, unique ways. Let us know down below in the comments section. I'm curious to hear. Of course, as a real estate investor, we do have some tax advantages, and not everyone owns property, rental property to be specific, and that's totally understandable. But owning real estate is definitely another key to potentially minimizing that tax bill. So I hope you enjoyed this video, guys. Hope you found it insightful. Make sure you go ahead and share it with the world. Get the friends out, share it on social media. I would appreciate that. If you did enjoy this video, give it a big thumbs up, smash the like button. I want to make sure that you are subscribed so that way you receive all future notifications and updates. We post them right here on this channel. Hit the notification bell as well. If you guys want to get some free stocks, all on me, all free, just for supporting the channel, go ahead and use the brokerage link down below. When you sign up with Robinhood, you'll actually get some free stocks, some values of thousands of dollars in some cases. You can also invest in crypto on Robinhood, and as everyone knows, crypto is booming right now. If you want to stay safe and secure online, so that way you could protect your cybersecurity, go ahead and sign up with Aura down below. That is today's video sponsor. Sign up with Aura. Highly recommend. You can start a free trial. Costs you absolutely nothing, and you could potentially keep those cyber bad boys at bay. So with that being said, folks, I look forward to seeing you guys in the next video. Thank you so much for watching.